Max Healthcare is the next company that we are going to talk to. Third quarter growth has mainly been driven by average revenue per operating bed, which saw a 15% growth on the year. Occupancies, though, have come in a little softer on a year-on-year and a quarter-on-quarter basis as well. Mr. Abhay Soi is CMD, Max Healthcare. He's joining us right now to take some questions. Abhay, good morning. Great to have you with us here. Thank you very much for your time. So I think occupancies have come in at about 73% as compared to 77% that we saw the same quarter last year. Could you tell us what happened? Is there some seasonality here as well? Or was that quarter sort of affected by a one-off? Let's start there.
So fundamentally, two things. One is this is higher bed capacity. So it's 73% of 4.5% more beds. The average length of stay has also come down by about 6 to 7%. So I think in its entirety, if you look at it, it's actually a growth. But in percentage terms, if you look at it, because like I said, it's of a higher base, then it seems like it's a percent down. But other than that, also last year, we had a large amount of dengue patients which came in the current quarter in the month of October, whilst this year that hasn't been the case. So there was an impact of, I think, 0.3% over there. So I think you have one positive impact and one negative effectively, which is sort of summing it up as a 73%, which is a 1% lower occupancy.
Mr. Soi, on the other hand, the average revenue per occupied bed, absolutely strong growth here. Could you tell us what happened, any particular segment which contributed disproportionately to this?
So we've been seeing the secular trend for a while now. It's not only this quarter. If you look at the last 4 to 5 or 6 quarters, in fact, we've seen that. And the main propellers of that has been international patients. That group for us has been growing at a 25% CAGR. Insurance, as penetration of insurance increases, we see people are a little price agnostic and more concerned about the brands. They pay the same amount of premium eventually. So for higher end surgeries, instead of window shopping and going into maybe smaller nursing homes, etc., they prefer larger established hospitals. So that segment for us has been growing at about 25-26% as well. I think other than that, oncology, which is our largest clinical program, has been growing at an outsized pace, whilst the rest of the organization has been growing at 14 or 15%. That's been growing at 20+%. Oncology is a high ARPOB business, and so all of these factors, kind of propel the ARPOB. I have been propelling the ARPOB now. They're fairly secular factors, and I think they've been propelling the ARPOB for the last 5 to 6 quarters.
So what does this mean in terms of margins? I mean, since the ARPOBs are getting propelled higher, on an average, your margins have been between this 26, 27, even almost 28% mark as well. Do you think you can build on to this in FY25?
So rather than margins, because margins and percentage terms, I've always sort of guided people to focus on EBITDA per bed. So whilst you see a small shrinkage of about 30 or 40 basis points on margins, you've seen there's been a growth as far as EBITDA per bed is concerned, because EBITDA per bed is, again, on a higher occupancy, higher capacity that we're looking at. And, we've seen a secular growth for the last, this is our 13th consecutive quarter of EBITDA per bed growth. So, it's not a 1 quarter thing, it's not a 2 quarter thing, it's been happening for the previous 13 quarters. And in fact, year-on-year basis, this is our 13th consecutive quarter of Y-on-Y highest EBITDA.
All right. Hi, Abhay. Good morning. EBITDA per bed, the last recorded number was what?
I think it's 75.5 lakh rupees on an annualized basis, as against 66.9 lakh rupees last year.
Okay. All right. Oncology, share of oncology as a percentage of business, that's moved up by a couple of 100 basis points, and that's helping your ARPOB. Where do you see this number stabilizing? The last recorded number is around 25.5%. How do you see this number move up?
So I think, like I mentioned, whilst the rest of the organization is growing at 14-15%, we've had a CAGR of 20 to 25% on oncology. So, I mean, I don't have the math on me, but, if you would just sort of extrapolate that, you'd get the...
Okay, all right. Abhay, since oncology is doing well and you have an asset out there where a PE is looking to sell, that CVC is looking to sell the stake that they have in HCG, would you all be interested?
Well, I can't comment on that, but we don't typically look at single retail outlets. Our format is slightly.
You haven't looked at this asset at all?
Like I said, I can't comment on that.
Okay. You have cash on your books, though. You have about 226 crores on your books. What do you plan to do with that cash?
No, we have 1,295 crores of net cash on our books. We are a debt-free company, and we add close to, this quarter we added less, about 250 crores, but on average, we've been adding about 300 plus crores every quarter to our kitty. We don't look at single retail assets, so we haven't really, it's not close to our knitting. We like large formats, hospitals, so to say, rather than smaller specialized nursing homes. So, that's the answer really on the HCG part. But, so we like to do stuff like Sahara entry in Lucknow and so on. So, those are typically things that we like to stick to.
So for Sahara, can you tell us what is the latest on that in terms of occupancies, growth, ARPOB, etc.? Where are we at currently and what's the scope of growth?
So we haven't gotten into the saddle as yet because the deal isn't entirely, we're still waiting for certain condition precedents to be. Majority of them have been completed, and the couple of them which are pending are on schedule, on track. We were always to, last month we announced that we were to complete the transaction in the next 2 to 3 months. It's only been 1 month since then. So I think at this point of time, I won't be able to sort of discuss anything more than what we provided to the exchanges.
Abhay, you have one of the sort of most aggressive capacity expansion programs, addition of beds. But you're also largely focused in Delhi NCR, metro tier 1 cities, right? Will much of this expansion, where is a bulk of this new expansion going to come in? Because there is, of course, in tier 2, tier 3 cities, etc. I'm not, you'll have to evaluate the purchasing power vis-a-vis the cost that you will incur setting up shop there. But there is great need, that much is for sure. Because we see people from all over coming to metros and, of course, the Delhi NCR regions, etc. So just wanted some thoughts on that.
So we have a hospital in Bathinda, we have a hospital in Uttarakhand, in Dehradun, we have a hospital in Mohali, in Punjab, and they've been doing very well. They're the best hospitals in the micro markets, and amongst and very, very strong ROCEs, even compared to some of our Delhi hospitals, etc. We have been very clear that there are about 20 to 21 cities we believe at least 2 or 3 of our peers have proven viability. These are not uncharted territories anymore. These are charted territories. We will be looking at entering these cities because we intend to do what they're doing perhaps better. At present, all the expansion that we're doing is we're basically elevating a business need because, majority of our hospitals are operating at anything between 85 to 90% midnight occupancy. That means, there's waiting in some of these hospitals, and, we have some unmet demand at our doorsteps. So what we are doing through expansion is really building adjacent towers, adjacent buildings, adjacent to our existing hospitals. So that's what I call brownfields. These are not greenfields in new sort of territories. 87% of our total expansion, the aggressive expansion that we speak about, is adjacent buildings to existing hospitals. Basically to meet untapped demand. So, typically if you have overspill of demand and you don't have adequate inventory to sort of this thing, that's probably the easiest business that you do in any, whether in hospitality or the healthcare sector.
Okay, all right. Thanks a lot, Abhay, for stopping by and giving us all of those details. Wishing you all the best for the remainder of this calendar year as well.